Really, I'm just going to be gone for a few weeks, but before I left, we almost made it back to 300. Then I went on vacation. And now we're back at round 240. Since the market has already shown us what it really thinks of Tesla and how afraid it is to miss out on what could be the greatest investment of a generation. Just look at the FSD or robo-taxi numbers. And because this stock isn't going to pump itself, let's work this out. First off, Tesla will undoubtedly recover again, barring the usual circumstances of financial crisis or black swan events. Additionally, the stock price of Tesla has dropped, but in my opinion, there is nothing to be concerned about. Nothing has really changed with the company since we were at about 300. Although the market is down a few percent, Tesla has dropped by around 20. Why is that? Well, the primary reason for this is that during the Q2 earnings call, we learned that there would be some factory outages. It wasn't entirely clear, but we know there are multiple factories because we were informed that there would be an international shutdown. This could refer to the Model 3 factories in Fremont and Shanghai, specifically, or it could mean something else entirely. Regardless, the market was not pleased with this news, even though earnings exceeded all projections. Our ratio is approximately 70. That means that Tesla's valuation is the total of 280 quarters at Q2's earnings rate. Yet the fact that Q3 will experience some downtime, potentially knocked off 10 to 15% of the value of the company, how can one quarter create so much damage? Well, overreaction and manipulation, of course. We also have Zachary Kirk coincidentally leaving as CFO after 13 years. There's plenty of speculation going around as to why that may have occurred, similar to when Andrew Karpathy left from being Tesla's leader for yet the company is still going and the AI aspects have never looked so good, but markets do not like any uncertainty. I would say though that the temporary shutdowns are the majority of the company evaluation loss. However, this is potentially more reason to believe that there will be a Model 3 Highland update. The rumors were pointing to it being around this time of the year. This shutdown sounds like it is relatively big, and it is for a line upgrade. So why would Tesla be doing a relatively large line upgrade now if it wasn't for the Highland update, even if it's not the Highland update, which I think about 75% of the investor community probably think is coming? Then it'll be a line upgrade of some other improvement, which will result in lower cost and faster production one way or another. But why would Tesla need faster production in Berlin or Texas? Their cell constrained there, not production speed constrained. The other theory I have, and as far as I know, I seem to be the only one with this theory, perhaps because I tend to follow sales and batteries more than most bulls who seem to concentrate more on FSD. That just happens to be more of my angle when it comes to analysis, which is fine. It's good to get everyone's analysis from different angles, but we have some fairly substantial tangible evidence of a brand new cal cell and battery factory with a capacity of around 80 to 100 gigawatt hours a year of production that happens to be right next door to Giga Shanghai. Now, I think this is perhaps the most underrated item right now when it comes to Tesla, and I hear hardly anyone else discussing it. We do, however, hear a lot of Tesla-related press talk about the fact that the Model 3 may soon have a 66 kilowatt-hour battery instead of the current 60 kilowatt-hour battery. We also hear about Cal's new cell that happens to be 10 more energy dense than off now. I don't like to boast that much, but I'm actually quite good at math. And when I add 10 onto 60, I get 66 kilowatt hours. You can check it on a calculator. If you don't believe me now, to me, if this factory is what I think it is, it's a bigger deal than the Cybertruck or Highland, at least for now. Although it might very well be part of Highland, it does, however, depend as to what phase the Cal factory is at and what the initial capacity will be. How much extra is this factory going to be worth to Tesla? Then, well, we could go into some deep speculative analysis or do some quick back of the napkin mess. If each kilowatt hour is worth about 150 to Tesla, then we're looking at around 15 billion gross profit, perhaps an extra $13 billion net, or at a ratio of 7.0910 billion dollars, or twice the current valuation. But even if it's 50, and that's not bad either, like I was saying, it depends on what the current run rate of the Cal factory is, as it may even mean that Tesla are putting in these factories in the Model Y and not just the Model 3. Maybe the Model 3 and the rationale behind rear-wheel drive cars switching to these new cells. This is quite exciting. The Model 3 can travel up to 300 miles on a single charge, and the Model Y can travel up to 260 or 270 miles on a single charge. This type of analysis appeals to me because it is easily quantifiable, unlike FSD, which has no basis on which to produce results or estimates. Elon even made estimates that were completely off for the last 7 years. Additionally, TSLA is a reputable battery manufacturer, and even though they are using a new chemistry, it is not a novel process like dry battery electrode. So hopefully it will ramp up quickly and be successful. Finally, there is that, which I believe is not priced and close to its potential. And then there's everyone else's favorite, the big shiny Cybertruck, which, although it may not achieve that until sometime in 2025, is still a showstopper and will serve as a massive. It's getting ridiculous how inexpensive some of these Model 3 cars are in some US states. Yet people are choosing to pay more money for Toyotas, in my opinion. Therefore, I really believe Tesla should be spending between $250 and $500 million a year on advertising. Toyota's people, not even BMWs, of which Tesla that beats hands down as well. Cybertruck is still on track. It lost a bit of momentum perhaps in the stock price as people believed it might have been launched this quarter. And now, it seems likely it'll be Q4. But Elon can't back down from Q4. The market went forgiven for pushing it another quarter, and he knows that this car has been delayed too many times already. We also get to see some of Tesla's battery engineering going into this car, with the most energy-dense electric car sale, without using silicon in the anode. Supposedly, at least perhaps we'll get a teardown sometime to see exactly what Tesla have achieved. Their wow, a Cybertruck teardown. Can you imagine as fascinating as it would be to watch? It's going to be almost painful. What a surreal is to tear down a Cybertruck, although it probably won't be that soon. I mean, who's going to give up their Cybertruck all right back to sales and batteries? And if Tesla can get that Cybertruck sell into volume production, then the game has changed. Everything is back to being as good as it could have been, and I'm going to double down on options. And LEET's not investment advice, more like a gambling tip where the odds are on your side, but it's still gambling, just like people can still lose their money in blackjack, even when they count the cards. To be clear, I'm not encouraging anyone to purchase or sell options. I only talk about them generically to demonstrate my belief in the firm at different times. In reality, for example, the Giga Nevada expansion is reportedly set to cost $3.6 billion, an upgrade that will put Giga Texas's building costs of $1.1 billion in perspective. All in all, this bodes well for 4680 sales. If Tesla is planning to add another 100 gigawatt hours per year, it could indicate that they have faith in the dry battery electrodes. Going back to the napkin map, if each of these high-energy dense cells, which are worth $250 per kilowatt hour, yes, far more than CTL's, is vertically integrated, made in America, receives government support, and generates a gross profit of $25 billion annually, plus the Cybertruck, we could reach roughly $50 billion annually by the end of 2025. At the current stock price, if it's running by then, and we didn't even factor in Mexico, that works out to a PE ratio of 15. Tesla should be keeping at least a per year 50 share, and probably more depending on the market's current perceptions on FSD rubber taxes, robots, or simply AI in general, as long as Elon isn't selling off too many shares or there isn't a significant recession. That's a respectable upside. I'm going to wait a little to see if it gets any cheaper, and then make a substantial purchase on some options. Maybe even some shares too. If I miss this dip, then so be it. It's not the end of the world, as it means my shares will have gone up anyway, so I can live with that. In conclusion, maybe Tesla was getting a bit too high before earnings, partly due to Cybertruck anticipation. However, there hasn't been a major disaster to really take this much off the stock price. It feels like it's on a bit of a downward trajectory.